Hello, everybody. Welcome to another episode of the Daily Dose. Today is Thursday, January 26th, and we just keep seeing a continuation of bullish moves as we've moved through this trend line and the 200-day moving average. And usually when you see a break of the 200-day moving average on the S&P 500, especially when the market has been, especially when the market has been trading in a range that is below the 200-day moving average, and we've been below pretty much since last April. When that happens, usually the next few months is a pretty positive return, and we are seeing kind of the beginning of that possibly right now. I do want to say, obviously, that this is a unique situation with us still being in the middle of rate hikes, a lot of quantitative tightening going on. But there are things too that kind of reinforce the idea of maybe a stock market rally in the short to medium term. GDP was better than expected today. We've had a couple large companies come out like Microsoft and Tesla that beat on their earnings. And obviously we still have a lot of big earnings reports to get, so that could be a volatile situation. But there are things that kind of are supporting this possible rally in the stock market. And again, you have to remember that the stock market is a forward-looking mechanism, and it's not a reflection of the economy. So the stock market may be looking ahead to the future and saying that the Fed needs to cut, that we're going to ease. Maybe the market sees that inflation possibly might have peaked, things like that. Maybe companies are not seeing as much of a dent in their earnings as the market was expecting, maybe. And we, from a technical standpoint, it's a huge breakout to get out of this trend line to be above the 200-day moving average. So from that standpoint, obviously you don't want to fight the Fed, but there's a lot of things happening right now and kind of moving against each other, and I'm really interested to see how it's all going to play out. But that's what I'm looking at on the S&P 500. If we move to Bitcoin, actually before we go to Bitcoin, and if you want to talk about some levels, so if we're going to the upside on the S&P 500, maybe 4,100 would be the next area of resistance, and then after that, like the 4,160-ish would be another area of resistance, so kind of in between the 4,100, 4,160. I think there could be some selling pressure for sure if we do keep moving to the upside from here. Okay, so let's go to Bitcoin. Bitcoin wasn't as strong in the last 24 hours compared to stocks. It did have a more aggressive move to the upside, but now it's kind of just hanging around the 23,000. It's been up there for a couple days now. And, you know, maybe if we do move past that 4,100, 4,160 on the stock market, we'll see Bitcoin push higher towards like the 28,000. But if Bitcoin decides to turn around, you know, the 21,000, 20,000 is going to be a big level of support now that we've broken through there. But I do think Bitcoin will continue to move higher as long as the stock market does as well. And if one turns around, at least in the last year or so, these have been pretty correlated. So I'd expect the other one to turn around as well. So that's what I'm looking at on the markets today. Again, like to keep these short and sweet. Bullish moves, technically. I know we still have to hear from the Fed in a couple weeks, the Jackson Hole, but this is a market that looks like it could rally from here. Whether or not we've actually seen the bottom, I don't know. But, you know, in the short to the medium term, it looks like we could move to the upside a little bit. But we'll see. It's still a lot of big earnings to come out. So I'll drop it here. Be sure to stay tuned tomorrow. Thank you for listening or watching today. Subscribe on YouTube and follow wherever you listen to podcasts. And I will see you tomorrow.